Hey Lafayette, Jim Keaty with Keaty Real Estate here. I'm constantly being asked, how's the Lafayette real estate market and how's the oil industry, the great flood of 2016 and the elections affected the residential real estate market here in Lafayette. So I put together this 15-minute presentation about Lafayette, where we came from in 2015, where we were in 2016, and where we're probably heading in 2017. I'm very interested in hearing all of your feedback, good or bad. Or if you have any questions about this presentation, you can always email me at jim@keatyrealestate.com, and I'll be glad to respond to you. I hope you find this presentation valuable. So we got a lot to cover, so let's get started. So you can't start talking about how 2016 was without talking about 2015. And 2015, we had the best year on record in Lafayette Parish for sales and volume. Now, all of my data comes from the Realtor Association of Acadiana, the multiple listing service, and 2015 was an incredible year by any measure. Now, 2016, we were down 4% from 2015, but I'm going to show you guys that the shortage of sales in 2016 was mostly due to the new construction sector. So the average sales price is also falling because there's a little bit too much supply in the price range above 300,000 in some areas, not all areas. And existing home sales are up 1%. Existing home sales are strong because of the high demand for homes under 300,000. However, the overall volume has dropped more than 56 million. Most of that is in the new construction sector, some in the existing homes, and I'll show you guys this. So, what we're finding is the demand is exceeding the supply in the lower price range homes, and is a great time to sell if you're priced under 300,000. And it could be a little tricky in the upper price range houses right now. Because we've got so much to cover, and I want to stay on track, we're going to start with giving you an overview of what the slides are going to look like today. So we're going to start with comparing 2015 to 2016 Lafayette Parish residential, and we're going to talk about by pendings. We're going to then talk about sales and transactions, number of sales or transactions. We're going to talk about the dollar volume, that's total dollar volume. And then I'm going to show you the average sales price, days on market, foot traffic, and months of inventory, all about all of Lafayette residential sales. Then we're going to break it down to the new construction, which is really important, and also existing home sales. And we're going to break down similar slides with pendings, home sales transactions, and I'm going to try to wrap it all up. So hope you guys can follow me. We're going to start with pendings. Here we show you 2015 versus 2016 pendings, right? So you can see 2015 was one of the best years on records, and pendings, those are homes that went under contract during the month. Now, there's usually a 30-day lag from going under 30 to 45-day lag from when you go under contract to when you close. So pendings are a really good lead indicator of what your next month or next 2 months going to do. And I want to point out that 2015 we had a great start to the year compared to 2016. Now, we came off a really strong year in 2014, and 2015 continued to be a great year. Now, one interesting fact is that our 2016, which is here in the blue, outperformed 2015's pendings in the fourth quarter. We also had a great July. Now, the flood happened in August, and we even had a better August than we did in 2015, even with the flood. And we know that there was homeowners that were in the market and decided not to buy because their house flooded or whatnot. But really, a significant fourth quarter in pendings, which is a good indicator of how your November, December, January, and February is going to go. So let's look at that. So now this is number of sales or transactions in Lafayette Parish, 2015 versus 2016. And you could see 2015, just outperformed 2016 every month until September. And if you remember those pendings that I showed you, that happened in October. and we had a great November as far as number of sales. So our fourth quarter actually outperforms 2015, which was the best year on record in number of sales or number of transactions. And you can see I've added a trend line here. The trend is it is trending up for the year as far as number of sales. And so we outperformed 2015, again, the best year on record in the fourth quarter. Now let's break it down by quarter. You'll see Lafayette Parish dollar volume. Okay, this is total dollar volume. And there's no question 2015 outperformed 2016 for the whole year of 2016. But again, look at our 2016 fourth quarter. We outperformed all of Lafayette Residential Parish dollar volume sales, outperformed 2015 in the fourth quarter. So we are, it looks like to me things are getting better. The perception out there is better. I feel like based on these first few slides, you could tell we're going the right way. Now this is the average sales price. Now let me explain something to you. We use what's called an average sales price, and that is the average sale for the entire market. So I'm looking at everything in Lafayette Parish that sold residentially in from 2012 all the way to 2016. Now you can see we peaked the first quarter of 2015. We had a peak, and it was around 228 in the average sales price in MLS, and we're down. We are down, and I continue. I will tell you, I don't see that changing. I think we're going to continue downward on the average sales price, but that's because we're not selling as many upper end price homes, but we're selling a lot of lower end price homes, and we'll get into that in a second. Okay, so this is a Lafayette Parish concurrent days on market. So we, as realtors in Lafayette, we use two different figures. We have what's called days on market, and then we have continuous or concurrent days on market, which means we use lots of strategies like taking houses off the market, then relisting them with a new price or new pictures or whatnot. And so we want the true days on market. So this is how many days a house has actually been on the market, not if somebody took it off and then put it back on. But you could see this is back from 2012 all the way to 2016. The blue is new construction. The red is existing or resale homes, and the green is the total of the two. There's no doubt since 2012 all the way to 2016, there's been a pattern of existing home sales selling faster and faster. Now we peaked in 2015 as far as how fast we sold those houses, and we slightly went up, but the trend is going down ever since 2012 to 2016 in existing home sales, whereas in the new construction you certainly see the trend. The average days on the market is increasing. There's no doubt about it. So let's see what we've got here. Historical data on foot traffic and pendings are a good lead indicator of future sales. So what I'm talking about foot traffic is actual showings. There's people out there, there's buyers out there showing houses, and the more people looking, which I would call that's the demand, the people out there looking to buy houses, the more likely we're going to have a better year. And in this case, you could see foot traffic, CSS, so that's the centralized showing service. If you had your house for sale before, you know that all the realtors in Lafayette, we use CSS, which is a service where if a realtor wants to see a house or if a buyer wants to see a house, they call their realtor. We call CSS. They set up the showing for us, and then we go out and show the property. So I want you to see this. In around March 2016 was the peak of foot traffic for the last 3 years. Now 2015 was a great year, but 2016 we actually had more people out there looking by 5%. So that's very interesting. Why didn't we have more sales, total sales? Well, part of it is most of the demand is in the lower price range, and we'll get to some other slides in a second about inventory. But if most of the demand is in the lower price range and we're lacking inventory, then those people can't find the houses to buy. So just because we had, we didn't sell as many homes in 2016, it doesn't mean that we wouldn't have if there were homes available. Let's move to the next slide. So this is the foot traffic by quarter, and you can see we had a great first quarter, second quarter, and all year long we basically were outperforming 2015 and 2014. And look at this, we outperformed 2014, 2015, and in 2016 foot traffic. And overall, there was a 5% increase in showings in 2016 versus 2015. So Lafayette Parish inventory, when we use inventory, you might hear other people say absorption rate or months of inventory, but basically, real estate is a function of supply and demand, right? And the more supply you have, the less the price is going to come down. And so we use a term called months of inventory or absorption rate. And the easiest way to explain this is if we had 6 months of inventory, that means if we stop listing houses today, it should take 6 months to sell out. Now, the impact of monthly housing inventory on home prices is, if you have 6 to 7 months of inventory, you're going to see that home prices will only appreciate with inflation, and really it's a neutral market. It's where supply equals demand. Prices aren't going to go up and prices aren't going to go down. If you have over 7 months of inventory or 10 months of inventory, it's a buyer's market, and home prices typically will depreciate or come down until that supply equals demand. And if you have less than 6 months of inventory, prices will always go up because there's not enough supply to meet the demand. So if you look at Lafayette, we've actually, since 2017, we've struggled to keep our inventory at 6 months. Our inventory is hovering around 5 to 6 months, and that indicates a very healthy market overall in Lafayette Parish. But you have to remember, 70% of the market is under $300,000. So you will find that in the upper price range houses, not in every location, but in some areas, the upper price range houses, you might see 9, 10, even 15 months of inventory, but that's a small percentage of the overall market. Majority of the sales are happening under that $300,000 mark. So when you're looking at the overall inventory since 2012, this is since 2012 all the way to December 2016. You could see here 6 months of inventory. We've actually struggled to keep it above 6 months since 2012. And we did have a spike here in January 2016. We had a spike. We went over 6 months. In October, OPEC met. They didn't cut production, and there was the whole perception of the economy. There was people who lost their jobs. They put their houses on the market. But that didn't last throughout 2016 like a lot of us thought we might have an increase in the inventory. It just didn't happen. So my theory is there's a lot of people like me and other people my age who's on their second home, and they might have had their baby, another baby, or their third or fourth baby, and they're running out of room, and they were thinking about, I got a good job, I could buy a new house, but I'm just going to wait because I don't know what's happening in the economy here in Lafayette, and I certainly don't want to overextend myself. So I think there's a lot of pent up supply and demand out there that once things start kicking off the right way, we're going to see a lot more houses come on the market, and we're going to have those people who are selling their house buying in the upper price range when they're more comfortable. Now, Lafayette Parish new construction, it's important that you've got to break out new construction and existing to really see what's happening in Lafayette. And this is what's going on in Lafayette quarter over quarter as far as sales. Now we're talking about sales, the number of transactions. We're not talking about dollar volume here. And so the MLS reported 17% less new construction sales in 2016 versus 2015. And you could see the quarters, and just to, I don't know if I have a slide, we'll get to it, but 2014 was the best year for new construction. 2015 was a good year, but it was trending downwards. And 2016 was 17% less in 2016 than 2015. So this is quarter by quarter. New construction sector is struggling, but I will say there are price ranges in the new construction sector that are selling, as fast as they can build them, and those are the price ranges under the 300,000 mark, definitely under the 250 to 180 to 250. If you're in that, you may be one of those people who have bought those houses and know that there's not a lot of inventory in that price range. But unfortunately, the new construction in the upper price range, they're struggling to sell them. There's a lot of inventory out there, but it doesn't mean they're not selling. It just means that they're selling at a slower rate than they're coming on the market. So they are selling. They're just selling. It's taking longer for them to sell, and you're seeing some discounts happening in the upper price range of the new construction. So here we are, new construction by dollar volume. Now we're talking about total dollar volume, and it's really close. Now I'm taking the average of all these numbers, so the numbers are really close when you're looking at the number of sales being 17% less and the volume being 16% less. But we're talking about approximately $45 million less in sales in the new construction in Lafayette Parish residential market versus the new construction dollar volume in 2015. You can see the quarters. The second quarter in 2015 just tremendously outperformed our 2016. So now we're going to go into Lafayette Parish existing home sales. We're going to start with the pendings. Again, pendings are a good indicator of what's going to happen in the next 90 days, right? So 2016 had an incredible fourth quarter as far as pendings go. You can see October was one of our best months, definitely in the last 2 years since 2014 as far as pendings. November, December, and I can tell you from our office, now this is MLS wide, our office is also, we're setting up for a very strong January, but definitely a strong February. Here's something that's really interesting. Look at the pendings that came in August. Now, what happened in August? We had the great flood of 2016, and yet we still had a lot of pendings happening. And so what that tells me is we had a lot of foot traffic, and I could tell you for certain we had people that they were looking to buy a house and sell their house, and after the flood they could not do that. So even with taking the flood into account, you could see they were still out buying houses in August. Now, how did that affect the sales? So existing home sales had an incredible 2014, and look at August. Our home sales were actually up in August, and that's when we had the great flood of 2016. And I can tell you for a fact that we lost a lot of sales. Not a lot, but in my office, we definitely lost a handful, and we're a small office. So some of the larger offices in MLS wide, I guarantee you this number would have been higher. It might have outperformed our best month ever, which was around, according to this, around July of 2015 for existing home sales. I would not be surprised if August of 2016 outperformed 2015. So Again, 2014, 15, and 16, August was the best month in 2016 despite the flood, and November was a record month as far as sales go. Existing home sales by quarter. So this is actually, again, the sales by quarter. We just broke it down by quarter. I wanted to show you, number one, in 2016, MLS reported 2247 existing home sales in Lafayette Parish. That's the most existing home sales in Lafayette Parish history, but it's only by 1%. So, we're 17 homes more than we in existing home sales sold in 2016 versus 2015. But as you can see, again, most of that was in the fourth quarter of last year. So here's your overview, right? So what's going on? And I'm just going to break it down from January to May 2015 versus 2016. Existing home sales, we outperformed. There was 17 more homes that sold in 2016 than they did in 2015. And I can tell you, I know this number, 17, would have been much higher without the Great Flood. And so it's only a 1% difference, but we're all of this is really in the second half of the year where we really start to pull away, which tells me the perception in the market is good. Things are looking good. There's that pent-up demand, that pent-up supply. Some of those people are going out there and looking at houses and coming on the market, but we still need more houses to sell in the lower price range. The new constructions were 182 homes less in 2016 versus 2015. That's a 16% difference. And if you look at all the homes in the market, we sold in 165 less homes when you add it all together in 2016 versus 2015, which is a 4% 4% less than in the number of sales or number of transactions. Now let's see what the overview is for the total volume. So here we are, overview of the volume. Existing home sales, we're down 10 million this year. Now why is that? We sold more existing homes in 2016 than we did in 2015. Why is the volume still less? Well, we didn't sell as many. We did sell a lot of larger homes. We did sell the $1 million homes. We did sell the $800,000 homes. We just didn't sell as many as we did in 2016. So it takes, if you sell an $800,000 house, it takes more of those lower price range houses to sell to make up for that loss. So, the upper range home sales were struggling in whether it was existing or new construction. Now, new construction sold, they're $46 million less, which is about 16%. Again, these are averages. I'm getting it from this data from the MLS, and these numbers are much, they have lot more numbers in it, and I just took the average. The all home sales were about 7% down from last year, and I will tell you, when we looked at these numbers, the third quarter, this 7% was much higher. But our fourth quarter really came in strong, and it looks like we're going the right way. Now, I'm not going to spend too much time on here, but real quick, number of sales were down 4%. The volume were down 7%. Average sales price were down 3%. Average days on the market were up 7%. What does that mean? That means it basically takes 7% longer to sell a house. It doesn't mean the houses aren't selling. It just means they're taking 7% longer. Inventory is down 11%. When you're looking at 5.9 to 5.23, that's only a 0.7 difference, but that's 11% 11% down from 2015 for 2016. Now, our pendings are up. So we had a huge fourth quarter as far as pendings. So what does that tell me? That tells me that, we should have a really strong 2017, at least the first quarter. And interest rates are slightly up. So, let's talk about that, actually. So, in closing, I just like to include this just because we want to know what's happening with where the interest rates are going. Here's some predictions. Now, I got this from the fourth quarter. This was actually some predictions from Fannie Mae, Freddie Mac, the Mortgage Broker Association, and NAR. back in October. So this isn't their new predictions, but in October of 2016, here's where they think the interest rate is going, and you can see, it's not increasing or changing very much. Now this could totally change. They've been saying that interest rates are going to increase for the last 3 years, and we just haven't seen it. So with the new president, what's going to happen? We're not really sure. Here's some historic. So those of you guys who think 4 or 5% is high, there's some of you guys that remember the 1980s where we had 12%, or even in the 2000s when it was 6.29. Nobody thought it could get lower than that, and that was the best they've ever seen. So the interest rate, in my opinion, would have to change significantly for us to see the buyers come off the market. So in summary, some neighborhoods in the core Lafayette are lacking supply in all price ranges. Prices under 300,000, they're stable. Supply equals demand. 75% of the market, that's where 75% of the market is. Inventory is low in the 300,000 and under price range because the baby boomers, they're downsizing, so they're buying those houses that are smaller, under 300,000. And the first-time home buyers, they're buying the houses under the 300,000, and because of the low interest rates and the high rent. So that's those two target markets, or those two markets, are buying, and they're competing against the lower price range homes. So it's eating up all of the inventory. Lafayette market as a whole, it's strong, but there's so many different variables. You can't blanket Lafayette, and you can't say all new construction is bad and all existing homes good, or we have too much inventory. Either one. The facts that I showed you here today is Lafayette Parish, only, but every neighborhood is different. No house is alike, and no neighborhood is alike. And I could tell you there is low inventory in the core of Lafayette in almost every price range. So all indicators are pointing to a very strong start in 2017, and I hope they're right. Lafayette is a great place to be, and I don't think anybody's going anywhere. So I hope you got some value from this. If you are interested in getting market updates, we have a Lafayette Parish market report that we put out every month that breaks down every price range and gives you an overall understanding of what's happening in the market. And then we also, we don't mind doing this. We can set each one of you guys up for your neighborhood to give you a neighborhood update, so you have a pulse on what's happening in your neighborhood for your biggest investment. My name's Jim Keaty. My email address is jim@jimkeaty.com, or you can text me at 337-344-4236. I really appreciate any feedback, good or bad. And if you'd like a market update, or you would like a neighborhood report, please email me. I'd be glad to set that up. I'll need your name, your address, your email, and in order to set it up properly. Thank you for listening. I hope you got some value out of this. And until next time, I'll see you later.